Yeah, welcome back. In a previous video, we have seen the journal entries in the books of receiver of acceptance and in the books of giver of acceptance. In the books of receiver of acceptance, so I said the types of problem is first is normal bills receivable. So that is first we have to sell the goods. Thereafter, we have for the after sale of goods for the amount whatever we supposed to receive for that we may accept the bill. So if we agree for the bill, so then if the party agrees, the party accepts the bill, then we call it as bills receivable for in the books of seller. So for that entry is bills receivable account debit to debtor account. Thereafter, event number three is during holding period. In holding period, we may have three options with the receiver of bill. So that is one is hold till maturity and in cash on the maturity. Second one is interest to creditor or liability. Third one, what we have is third option is discount with anchor. So if it is discount with banker, so then we would have received the money and balance we could have. So that whatever the duration is, the duration of the bill is there. So for that, you would have charged the interest in the form of discount. Then event number four is on maturity. Either it's a honor or dishonor. It depends on the way how we have used it during holding period. So during holding period, so if we have hold for maturity, then we will receive the money. In other two aspects, if it is honor, so then no entry in our books because if it's interest with creditor or discounted with banker, so they will receive. So therefore, in our books, no entry. Suppose if it is a dishonor, based on the situation how you have used during the holding period, if it is hold till maturity means so bills receivable with us, so therefore we have to cancel debtor account, we have to debit back. Therefore entry bills is sorry debtor account debit to bills receivable account, uh, debtor account debit to bills receivable account including noting charge. Second one, suppose if we have endorsed with creditor, so then at the time of receiving the bill, debtor would have been cancelled. At the time of BR, when we have endorsed to creditor would have been cancelled as well as BR would have been cancelled. So therefore now, since BR is not honor, that's a dishonor. So debtor also not collected, creditor is also not settled. So therefore we have to reverse it back. Entry is debtor's account debit to creditor's account. So debtor's account has to be redebit, creditor's account has to be recredited. Then lastly, if it's a discounted with banker, we would have in cash, we would have received the cash. So therefore, at the time of dishonor, so banker will again ask back the cash. So therefore, I have to return it the amount. So whenever you are, that's at the time of maturity, honor or dishonor, it is for full amount. So on bill amount, I have to refund along with interest. So that's what the concept. First is the dishonor. So that is now at the time of dishonor, debtor account has been redebited. So thereafter we will initiate the process of recovery. At that time, if the party is insolvent, then only to the extent of recovered, we will cash or bank account. So that is cash or bank account to the extent of unrecovered portion. So bad debts account to debtor account totally closed. So this is what insolvent one extra entry. Suppose there is another concept called renewal of bill. So that is if the party that is the bills acceptor. So if he approaches before the maturity date for the extension, and if we agree, then the renewal of bill concept will apply. So in case of renewal of bill, only for the extended period and for the bill amount, whatever the renewed bill principal amount is there, only for that interest payment will apply. Interest is mandatory, but only for that amount. Either may be condition half of the amount you have to settle now, or full amount interest you have to settle now. Full amount it can be extended, or for the extended period for full amount including interest, the new bill will be drawn. Like that, any of the condition can be attached. So based on that, we have to switch. But it is a, for the extended period, for the extended bill amount, interest will apply. That is renewal of bill concept. So for in case of renewal of bill, that grace days concept will not apply for the first bill because you are not going to pay now. You are asking for extension. So therefore, whenever you are paying, that time it will apply. Then lastly, retirement of bill. Retirement of bill means paying in early. So that is bill period is 3 months. You are paying in a 2 month itself. So that means 1 month early you are paying. So since 1 month early you are paying, you are eligible for 1 month discount. So that is 1 month interest will be eligible in the form of discount. That's what we get on this discount. So since you are retiring early, so it's like prepayment. Correct? So based on that, we will solve the problems. So accommodation bill, one concept is there that we will do it. Yeah, yeah. Come on, let's go to the problems. Problem number one. So it is renewal of bill. So usually majority of the questions will be in the books of like receiver of acceptance, because in his books only. So we have like multiple options such as like uh, hold till maturity, endorsed to creditor, discount with banker, renewal of bill. So in that case, how it will be? So he has to cancel the old bill and he has to issue the new bill. Retirement of bill. So almost like majority of the concepts will apply in the books of seller, that is receiver of bills acceptance. Therefore, majority of the focus will be there. Come on. Problem number one. Renewal of bill. Mohan sold goods to Gupta on 1st September. Mohan sold goods to Gupta on 1st September. So here dates are important. So 1st September 2014 for 1600. So this is what bill amount. So first is the sale of goods. So entry is debtor account debit to sales account 1600. So debtor is here Gupta account. Gupta immediately accepted 3 month bill. So Gupta has accepted. So that means our customer has accepted means for us it's a bills receivable. So for Gupta it is a bills payable. So you have to check in whose book you are in. In his angle you have to pass the entries. On due date. On due date, Gupta requested that the bill be renewed for a fresh period of 2 months. It is a fresh period of 2 months. So for this 2 month only, interest will apply. Interest will apply. So here, Mohan is the bills receivable. Mohan agrees to provide. Mohan agrees provided interest at 9% was paid immediately in cash. Immediately, that is 1600 is the bill amount. For that 1600, if he agrees to pay interest for 2 months, whatever is there, that interest if you pay now itself, then only I will agree. That was the condition he has attached. That means out of 1600 principal, he is not settling any amount, only interest he is supposed to pay now. That too in cash. For the balance 1600 as it is, so I will cancel old bill and I am going to give it new bill. To this, Gupta was agreeable. The second bill was met on due date. So after 2 months plus 3 days, whatever is there, it will be met. So here, for the first bill, since it is not honored, it is he is asking for extension for first bill. Due date, sorry, grace days concept will not apply. Now, give general entries in the books of Mohan. So for Mohan, it is bills receivable. For Gupta, it is bills payable. So for us, we are in the books of Mohan, who we have received the acceptance. So therefore, for us, it is a bills receivable asset. So let us see 1st September. From there, 3 months. So thereafter, 2 months. So this was the concept. Come on, let's solve the process. Let us pass the entry. Question number one. Question number one, renewal of bill. Question number one, solution. Solution. So it is renewal of bill concept. Renewal of bill. Renewal of bill. So journal entries. Journal entries in the books of journal entries in the books of Mohan. In the books of Mohan. Mohan. So for him, it is a bills receivable asset. Yeah. So date, particulars, debit, credit. Yeah, to start with, first date is it is 1st September 1 9 14, 1 9 14, right? Yeah, 1 9 14, 1 9 14. So first is we sold the goods, so therefore first entry is Gupta account, Gupta account debit to sales account 1600, 1600. So being goods sold to Gupta on credit, being goods sold to Gupta on credit. So on the same day, 1914, Gupta accepted the bill. So when we accepted the bill, entry is bills receivable account debit, bills receivable account debit to Gupta account, Gupta account 1600, 1600. So this, for your information, I will write it is bill number 1. It is a bills receivable. That's the first bill. It is a first bill. It is a first bill, just for your information. It is the first what we have accepted on 1st September is first bill. Then, so during this period, so they have not said like that is we have transferred, that is hold till maturity or transferred to credtor or indus to discounted with banker, nothing said. So that means we have to assume that it is a hold till maturity, bill is with me, because they have not said either it has been discounted with given to banker or it has been given to creditor, nothing has been mentioned. So therefore we have to assume it is bill is with us. Now, so here plus 3 month. So after 3 month, plus 3 month means it will come to 1 12 14, 1 12 14 plus 3 days grace we supposed to add only if it is honor. So since it is not honor, I am going to write date is 1 12 14 after 3, 1 12 14 after 3 month, after 3 month, that is for 9 plus 3 month I have added, that's it. Yeah, so 1 12 14. So here on that day, so Gupta has approached for renewing the bill, correct? And he is also agreed. So who has agreed? Mohan. So our in whose book we are in is agreed. So therefore, since we are going to renew the bill, old bill has to be first cancelled. So thereafter, interest we have to calculate and we have to charge to his account. Interest we have to receive, and for the balance, new bill has to be given. These are the three things what we have to do. Whenever you agreed for renew of bill, old bill has to be cancelled. Correct? So old bill account, bills receivable account we have debited while receiving. Now, so on the maturity date, we assume that it is like it is a whole till maturity. Therefore, bill is with us. Therefore, we have to cancel first. Old bill has to be cancelled first. Entry. So old bill has to be cancelled. Entry again. Gupta. Gupta account debit. Gupta account debit. Gupta account debit to. Yeah. So entry for cancelling the bill is Gupta account debit. Gupta account we have to redebit, and bills receivable what we have, that bills receivable we have to close. So therefore entry Gupta account debit to bills receivable account, to bills receivable account. So 1600, 1600. So we have redebited the Gupta account and we have closed the bill account. Now, so on the same day, now we have to calculate the interest. So because we are going to give 2 month extension, so for this 2 month extension, interest will come. Correct? So therefore, interest first we have to calculate. So for the receiver of bill, so in this interest is an income. So therefore, on same 1 12 14, first to due entry we have to pass interest. So that is for Gupta account we have to add Gupta account debit, Gupta account debit to interest income account, interest income account, which is 1600 into 9%. 1600 into 9%, which amounts to 1009% into 2 by 12. 1600 into 9% into 2 by 12. Just for 2 months, interest has to be calculated. Yeah. So interest 1600 into 9% into 2 by 12 into 2 by 12, which is 24, into 2 by 12, which is 24, 24. 24 rupees is the interest. So for 2 months, for entire 1600, he said this is agreed to renew for 2 months, provided if you pay interest immediately in cash. So this 24 rupees we have to receive in cash immediately. Now look out in a debt in Gupta account how much is there. This 1600 rupees I have redebited plus 24 rupees interest receivable we have debited. Now this account Gupta account we supposed to close for by giving new bill. So how on the same day 1/12/14 new bill we are going to give. So that again. So bills receivable account debit. Bills receivable account debit. So it is 1600. So for this 24 rupees interest we are receiving in cash. Therefore cash account debit 24 rupees we are going to receive to Gupta account. To Gupta account 1624 account is closed. 1600 in bills receivable and cash 24 rupees. This account is closed. Correct? So now this bills receivable what we have given, this is bill 2. This is second bill. So this is going to mature after 2 months. So therefore for this plus 2 months if I add, so it will become date is actually it is a December, January. So therefore it is 1 to 15 is the amount. Sorry, due date. So plus since it is a 2 month we have had December and January. So therefore February 1st it is maturing. Plus since it is a honoring plus 3 days grace you have to add. Therefore 1 plus 3 4. So therefore it is with grace days because honoring of bill entry. On that day, Gupta is honoring second bill. So therefore, entry is cash or bank account. Cash or bank account debit. Cash or bank account debit 1600 to bills receivable account. Bills receivable account 1600. 1600. Second bill was honored. So therefore, money was received. If it is a dishonor means entry would have been different. So this is the entry for problem number 1. Excuse me. Next, let's go to the problem number 2, which is retirement of bill. Retirement of bill. Retirement of bill. On 1st January 2015, A sells goods. A sells goods to B. A sells goods to B for 10,000. So here also there is a sales. 1st January, A sells goods to B for 10,000 and draws a bill at 3 months. So bill is for 3 months for the amount. B accepted it and returns it to A. So therefore here A draws the bill. For A it is bills receivable and for B it is bills payable. Accepts it and returns it to A. On 1st March 2015, B retires his acceptance under rebate 12% per annum. Record these transactions in the books of B. In the books of B, he has asked, let us write in the books of both. In the books of both A and B. In the books of both A and B. Yeah. Let us write it in books of both A and B, both. So here, first selling the goods on the same day he accepted the bill for 3 months. So that is 3 month means it is a 1st January actually 1/1/15 to 3 month means it is actually 31st March. That is what 3 month. but he is paying on 1st March itself. 1st March itself, 1/3 itself he is paying. So therefore, 1 month in advance he is paying the bill. So that 1 month advance, whatever the interest is there, that we will have to allow him as a discount. So come on, let's go. In the books of A as well as in the books of B, that is in the books of bills receiver as well as in the books of bills payable, etc. For both the books, let us solve the entry. Question number 2, amount is 10,000. Question number 2, page number, solution. Now, so here, general entries in the books of first is, so I will draw in a 2 column, you draw it in one after one. So first is in the books of journal entries. So first column I will draw in the books of bills receiver, acceptance of bills receiver. So first is in the books of acceptance receiver, that is bills receivable. In the books of A, in the books of A, in the books of A, here in the books of acceptance giver, in the books of B, in the books of B. Yeah. So now first entry is, my dear friends, for sale of goods. So sale of goods entry is in the books of A, it is B's account debit. B's account debit to sales account 10,000 being a credit sales made to A. Then second entry, on the same day B accepted the bill. So therefore entry bills receivable account debit to B account 10,000. Next, third one. So that is, we have received the bill now. So they have not said like it is endorsed to creditor. Nothing is there. So here just on the 1 month early he is making the payment. So therefore we assume that hold it till maturity. Bill is with us and he is making 1 month early. So therefore we have to cancel the bill and we have to give him 1 month discount and we have to receive the money. So therefore entry on maturity, it is the entry is, my dear friends, it is a cash account debit, cash or bank account debit. So let us wait. Rebate on bills discount account debit. So how much it is? 10,000 rupees into discount is the rebate of 12%. So therefore 12% into 1/12, 1 month interest. 1 month interest, which is 10,000 into 12% into 1/12, which is 100 rupees. 100 rupees is the interest. So therefore 100 rupees interest you have to allow him as a discount. So therefore 9,900 you are going to receive in cash to bills receivable account. Bills receivable account 10,000 to bills receivable account 10,000. Yeah, so that's what amount we have received. So if you want that rebate on bills discount, whatever amount is there, that you can transfer to P&L at the year end. So this is what honor of the bill on the due date. So we have received the money. Either date wise you can write or 1 to 3 here you can write it. So here I have not written the date, but exam and all you have to write the date. Now, let us come to the corresponding entries in the books of acceptance giver. So for him, look out. Here for his sales means for him it's a purchases. So therefore on purchases, so first entry is, it is a purchases account debit to A's account 10,000, 10,000. It is a purchases. Then we have accepted the bill. So therefore, bills payable. So for him, it is a bills payable liability. Therefore, second entry, it is A's account debit to bills payable account. Bills payable account. Bills payable account being bills accepted for A. Amount is 10,000. 10,000. Next. So on maturity, we are going to honor the bill in 1 month advance. So therefore, 1 month interest we are receiving. 1 month interest we are receiving in the form of discount. So therefore, here entry number 3. At the time of payment, it is a bills payable account debit. Bills payable account debit. Bills payable account debit to cash account. Cash account already we have calculated, therefore amount I am copying directly. So amount is 10,000 is a bill, but 9,900 we are paying to discount, to rebate on bills discount, rebate on, so bills discount, which is income, which is nothing but discount received income 100 rupees. Discount received 100 rupees. So this is what entry in the books of acceptance giver. Acceptance giver. Next, let us go for problem number 3. It is a type of insolvency problem. Let us see. Mr. David draws two bills. Mr. David draws two bills of exchange on 1/1/2016 for 6,000 and 10,000. So 1st January 2016. So we have the two bills we have drawn. One is 6,000 and 10,000. So he has drawn the bill. So already we have drawn the bill. That sales transaction would have occurred or loan, whatever it might be, some amount we are supposed to receive. So for that already two bill of exchanges we have drawn. One is for 6,000 and another bill is for 10,000. Now, the bill of exchange for rupees 6,000 is for 2 months. So that 6,000 bill is for 2 month duration, while the bill of exchange for 10,000 is for 3 month duration. So therefore, 6,001 bill, 10,001 bill. So these are 2 month period. 6,000 bill is for 2 months and 10,000 bill is for 3 months. These bills are accepted by Mr. Thomas. So both are accepted by Mr. Thomas. Now look out. So first bill 1/1/2006, 1/1/2016 plus that's a 2 month duration. It's a 2 month duration. 1/1/2016 plus 2 month. It is 1st January to January, February. That is 1/3. So it is a March. So on March, Mr. Thomas requested David to renew the first bill. So that is, we thought he is waiting, but on maturity date plus 3 days grace he has added. On that day, he has requested the bill to renew. He has requested the bill to renew. So therefore, so here first bill with 18% interest for the period of 2 months. So first bill on maturity date, actually it was a first grace days is not applicable, but here they have given let it be. So here on 4th, he has requested to renew the bill. So therefore, academically it holds good. Only the grace days concept is only for the preparing of payment. Only for that period it will apply. So but here anyway date they have given, therefore we are using. So for first bill actually 1/3 it is maturity. So if he is honoring, then only plus 3 days. Correct? So if he is not honoring means, so we have to calculate from 1st March itself. Actually, the date has to be calculated because here 3 days extra. Then again for next bill plus from that 4th if I calculate again for that plus 3 days means for the same one transaction 6 days extra we have given. So that is not acceptable. So therefore only one time it has to be given. Okay, fine. Anyway, date is given, therefore I am copying this date. So on 4th, he requested for first bill to renew for a period of 2 months, another 2 months with a 18% interest. Got it? Then let us see. Mr. David agrees this proposal. On 23 2016, Mr. Thomas retires the acceptance for 10,000. The interest rebate, that is a discount being 100. So that means, so first bill he has extended for 2 months, and second bill 10,000 was there, no, that he has retired in advance. Let us see, on 1st January he has retired. 1st January he has accepted the bill, 10,000, but on 20th March, so anyway might be 10 days, 10 days left. So because January to 3 month means January, February, March, 31st March plus 3 days means it is a 4th is the due date. 4th April is the due date. But here 20th March itself he is retiring the bill, paying in a little bit some 10 days advance, but discount is agreed at 100 rupees discount you have to allow. So therefore 9,900 he will pay in cash. So it is a retirement of bill concept also there. So before the due date of the renewed bill, Mr. Thomas become insolvent, and only 50 paise in a rupee could be recovered in his estate. That is, out of 1 rupee, 50 paise is recovered. Means it's a out of 100%, 50% is recovered. So therefore, balance 50% we have to charge to bad debt. Yeah. So that is the concept here. So he renewed the first bill with interest 80%, 18%, with interest 18%. So he has nothing paid on the date of renewal, no cash has been paid. So whatever the 6,000 rupees plus 18% interest for 2 months, we have added it for the new bill and we have renewed, but ultimately it was installment. This is the story. Come on, you are to give the journal entries in the books of David. So here in a same problem, one problem, mark this as highly important. So in a one problem, there are two bills. One bill is 6,000, one bill is 10,000. Six bill is 2 months is the duration, 10,000 is 3 months duration, bill 1 and bill 2. So bill 1 on the maturity date, this bill was renewed at an interest of 18%, and ultimately he has become the insolvent. 50 paise has been recovered from bill 1 including interest. Second bill, on maturity date, before maturity date, he honored the bill. So that is a retirement of the bill. So therefore, we have to receive the money by giving the rebate. So therefore, here normal bill of exchange entries plus renewal of the bill concept, retirement of the bill, and insolvency all are there. Correct? So this is a combo of all. Come on, let us go. In the books of Mr. David. In the books of Mr. David. Question number 3. Question number 3. So page number, it is all. All adjustments. All adjustments are there. In the books of Thomas. In the books of Mr. David. In the books of Mr. David. Journal entries. In the books of Mr. David, journal entries. So first is date, particulars, debit, credit. Yeah, to start with, so date is my reference. It is I think it is date is 1st January 2016. 1st January 2016. So date, so 1/1/2016. So that day there was a two bill, correct? So that day he has accepted. So he draw the bill of 2. So therefore entry is, so already Thomas account should have been debited. So on acceptance of a bill, so this will be credit. So therefore here there is no sales transaction. This I don't know whether it's a sales or some amount loan has been given. That amount receivable was there. Somehow he accepted the bill means he has to pay. So therefore from his book his account will be nullified. BR account will be created now. So therefore entry bills receivable account debit. Bills receivable account debit. to Thomas account. Thomas account. Correct? I can create it as like only one entry, but I don't want because here 6001 bill, 10,001 bill is there. Therefore, two entries I will pass here. 6,000, 6,000, and on the same day again 1116 is a second bill. Bills receivable, bills receivable account debit to Thomas, account, which is 10,000, 10,000. Yeah, for first bill narration is being Thomas accepted the bills for 2 months. 2 months. Second one being Thomas accepted the bill for 10,000 for 3 months. Then, so next transaction is they have said on due date. That is, it is the first bill. First bill now on due date. That is on 1/4. Sorry, 1/3. It is a 2 month. First bill is for. It is for 2 month. So here it is for 3 month. For 3 month. So now here on 4/3/16. 4/3/16. So bill 1. So they are going to renew. So therefore, first bill has to be cancelled. Interest has to be add. Thereafter, new bill has to be issued. This is a three transaction, three events. If you touch renewal of the bill, old bill has to be cancelled. Interest has to be add. Then new bill has to be issued. These three events we have to do with. Thereafter, we come for second bill. Let us see. Now, for first bill, first we have to cancel old bill entry. It is a Thomas account debit to bills receivable account. Bills receivable account, which is 6,000, 6,000. So Thomas account is closed, reversed. BR has been cancelled. Now Thomas account has been redebited. So now we have to add interest for interest at 18% for 2 months. We have to add the interest. So therefore, 4/3/16, Thomas account debit to interest account. So interest is my difference. It is 6,000 into 18% into 6 by 12. I'm sorry. 2 by 12. 2 by 12. So therefore 6,000 into 18% into 2 by 12, which amounts to 180. 180 rupees to Thomas account we have added. So Thomas account shows 6,180. Now for the entire amount we are issuing new bill. So there is no cash settlement at all. So therefore on the same day 4/3/16, actually this 3 days grace will not apply, only on first itself it will apply. So new bill we are going to issue, that is called bills receivable. Bills receivable account debit to Thomas account. 6,180, 6,180. That's the entire bill amount. So now this is first bill concept is over. So this is first bill concept renewal. So renewal of first bill. Renewal of first bill is over. Renewal of first bill is over. Now we go for next case, which is second bill retirement. Second bill. So this bill we have extended for 2 months. So after 2 months only this bill working will come. So now the second bill what we had, that bill we are retiring some 10 days early. So for that 100 rupees discount we got. So therefore, so that date which is on 20th. 23/16, that day we are retiring the bill. So therefore entry, it is cash or bank account debit 9,900, rebate on bills discount account debit 100 rupees, because they allowed the discount of 100 to bills receivable account. Bills receivable account. So second bill, which is total 10,000. So this is rebate. This is retirement of bill. Retirement of bill. This is retirement of bill. So this whatever second bill we have passed here. So for this second bill, this entry for that cancellation. That second bill entry, this is. Yeah. So now this is the only entry at the time of retirement. It's a mature honor. Next we go for on when he become insolvent. So he has become insolvent on before the due date, the renewed bill, Mr. Thomas become insolvent. Before due date, they have said. So we don't know exactly what is the due date. So therefore, let us put it on 31st March. Or 4/3 plus 2 month, it is 4 plus 4, it is a third month, March, plus 2 months. So therefore, it is a 4/5. So 4/5, he become insolvent. So 4/5. So 4th, 5, 16. Yeah. So this is on due date. On due date, just I have taken that day he become insolvent. So therefore, when he become insolvent means first that bill whatever we have drawn now, this bill. So this bill whatever is there, this bill was renewed. So that bill first you have to dishonor entry. Dishonor. Thereafter, we have to go for recovery. That time 50% he paid, 50% not paid. Therefore, that bill you have to cancel first. So this entry is Thomas account debit. Thomas account debit to bills receivable account. Bills receivable account 6,180, 6,180. Now look out, that bill, say renewed bill also cancelled. Thomas account has been redebited to the extent of including the 6,180 as if we supposed to receive. But how much we received? Only 50%. So therefore, on 4/5/16, so entry is cash or bank account debit. Cash or bank account debit. So it is 6,180 into 50%. 6,180 into 50%. So 3,090. So bad debts account debit. Bad debts account debit. So 3,090 to Thomas account. Thomas account 6,180. 6,180. So being insolvency of a party. Being insolvent of a party. So this amount now we have closed. So this is what? Problem number 3. Problem number 3. Yeah. So next concept, let us go for accommodation bill. So accommodation bill concept, what actually? So that accommodation bill theory first let us discuss. Thereafter we will go for problem. Accommodation of bill. Accommodation bill.